Welcome to the Blue Collar Wealth Club podcast. I am your host, Jerry Garcia, and today we have a very special guest, Sharon Riddle. She's going to come on and talk to us a little bit about some entrepreneurial experiences, and we're going to get into kind of her real estate investing journey, how she got to where she is and what she likes to invest in, some of the challenges along the way. Without further ado, Sharon, how are you doing today?
I'm doing great, Jerry, and just so happy to be with you.
Yes, very excited to have you on. Very excited to kind of hear a little bit more about your background and what you've done and really get to know you a little bit. Let's start there. Let's go back in. We've talked a little bit before the interview here about how you have a family really that has a background of owning lots of businesses, especially in the blue collar space. Very excited to talk about that. Not all the investors that I'll be speaking to have that same sort of background. Why don't we talk about that?
Sure. Well, I had two uncles that had businesses, and my dad did. My dad was in construction. He was a backhoe operator, so he had a very specific blue-collar skill. Actually, he was part of a team that helped build DFW Airport. So if any of your listeners have had to go through DFW Airport, it's a small city now, but as a kid, I was on some of the runways before they were poured.
Oh, wow.
Because of my dad, yeah. One-ton dually, get the older kids out. My dad had a real sense of accomplishment regarding that project, but also a real sense of history. So he thought it was going to be really monumental, not only for the economy of Dallas-Fort Worth, but also it was going to be travel of the future. That was what he contributed. And then my two uncles, very different types of businesses. One was an auto mechanic, and we took all of our family vehicles, trucks and cars, mostly trucks because construction kind of family, over to Uncle James in Decatur, Texas. He had that business many years. He was also from an entrepreneurial family. His dad had businesses in Decatur, Texas, and he had entrepreneurial uncles also in the Decatur area. So they had multiple businesses, and he was able to leverage off of the family reputation as entrepreneurs and really exceptional service that they delivered. It was family service. They just really prized their customers and treated them very, very well. And then I had an uncle who was HVAC and plumbing. He had been part of a partnership. Some things kind of unwound in the partnership. He was the one with the really strong connections to the Denton area to get that client base. However, he ended up launching a second business after another partner bought him out. And so it was also heating and air. He launched a second business, but he was really a solopreneur versus in a business partnership. And that was my immediate family there.
Wow. It's quite an extensive background in the blue collar space and small business in general, and that's awesome. Gives you a very different sense of kind of how you come up in that space, and it's just a whole different beast. Owning a business, running a business, growing a business, like you said, having that great reputation in the areas you guys had and being able to leverage that when starting new business ventures is outstanding.
Right. And in fact, Aunt Sally trained my mother in bookkeeping.
Okay.
She had like an after-school job for a local paper in Denton, the Denton Record Chronicle, which still exists. She had been a proofreader and a bookkeeper. She contributed in that way when she married my Uncle James. So she immediately became the bookkeeper and taught her sister, my mom, bookkeeping as well. When we would go over to my cousins, there was a lot of bookkeeping conversations so they would have everything lined up for their CPAs.
Great, yeah, and that's another aspect of business that most people either try to do themselves or eventually, when the businesses start to get big, try to offload. Knowing the books is a very, very important piece to kind of knowing the value of your business and how it's growing and where it's growing, and those numbers are keys. Definitely something you like to have as much control over as possible and really have a good understanding of, so that's awesome. Let's flip a little bit. I want to talk to you a little bit about your investment business. So you have kind of a unique situation. Your company's called Excalibur Investments of Texas, correct? Business partner is also your husband, Daniel. Let's talk about that. How is that? How you guys have been in business together for how long?
Well, we have been in business since 2005. However, we have had different focuses. In 2005, we were partners a single family business, single family residential. So we invested in single family residential in the Dallas-Fort Worth area. We would pick up these rentals. At first, we thought we were going to be really more flippers, have our team come in and rehab and then flip. However, the market kind of started slowing a little bit, and we found that a little more challenging to do. So we ended up becoming landlords. We did have a realtor in the beginning who was going to be our property manager in that space. However, just the way I was working with him, I just really felt he was not as efficient as I could be. He was a nice person, but I did let him go.
It's important to make those decisions as quickly as possible.
You do. You have to just rip off that Band-Aid.
This is in 2005 that you guys started, so tell me a little bit about how the kind of 2008 real estate crash affected your business. Did that change your strategies at all, or did that afford you new opportunities?
It really changed our strategy, and I'm glad that you brought that up, Jerry, because that was one of our pivot points. We ended up going to an Alan Cowgill boot camp for private lenders.
Okay.
We ended up working with private lenders. In the beginning, we were able to get some bank loans or had some of our own seed money that we could utilize because Dan did have a rollover. And we have had multiple LLCs that we have structured from 2005 moving forward. But we ended up having to work with private lenders is what sustained us through that 2008 time period. And in fact, my late father-in-law, Charles Riddle, was our first private lender. And then it ended up becoming some friends of ours, private lenders, next door neighbor of a friend who could see how this really worked. One of my neighbors down the street, she's still my neighbor, a retired nurse now. These were people that we knew, and they had some trust in us because we had initially operated these single family rentals. And Dan, of course, still had his W-2 income in aerospace. So he is with Bell Helicopter still. They had a lot of confidence in what we could do and the backgrounds that we had. Dan and I both have MBAs. I just could work with contractors very easily because of my childhood with my dad. Talking to contractors was very easy because those types of people, male and female, were in my modest childhood home. That wasn't a really big deal. But I will tell you how we even structured some of that is we had some general contractors we worked with. We had some independent vendors like plumbers, electricians, who also ran their own businesses. So we sought out entrepreneurs because we really got really great service from entrepreneurs, especially those that had a family business. But we also had handymen, and the handyman could really help us on the expense level. We needed to look at those expenses and keep everything leaner. That is how we did that, and we had two exceptional handymen over that time period from 2005 all the way up to the exit time of 2019 for the single family homes. In 2015 is when we actually met Brad Sumrock, our multifamily mentor, through a single family mentor in Dallas-Fort Worth, Dennis Henson. So we went to Brad's first event. It was like a modest rat race to retirement. We just thought, Dan and I both thought, wow, we are thinking way too small here. That is when we discovered the power of syndication and that we could work with other investors who had established businesses. In fact, one of our early investors that we worked with has their own business. The whole family is in that business, and they're also vertically integrated. So they handle all of their operation, both the property management side of the house as well as the investment side of the house.
Sure. I want to backtrack a little bit and talk about the private lending aspect, because I think that's that's a concept that a lot of people may not be that familiar with. And so in 2008, we had the big housing market crash, as you and I know, but some of the audience may not. Banks really tightened the purse strings at that time, and they really were very wary of lending money, as a lot of the properties across the country lost half of their value or more. You had this whole plethora of properties that were upside down, or people just abandoning their mortgages. You were fortunate enough to find some private lending. Let's talk a little bit about how that came about. What kind of terms were you talking about with these friends and family that you were able to leverage to kind of purchase some properties and really build your real estate portfolio?
Sure. Well, at that point in time, it was 8%. It was just a flat fee that was easy for them to understand. It's something we could work with, and that was our offering. We did pay that out monthly. They got those checks every month.
Yeah. Were you guys borrowing the full amount to pay cash for these properties, or were you borrowing just enough to get a large enough down payment so that the bank would approve a loan? How were you working that aspect of it?
Well, we were buying them with cash.
Perfect.
We had investors that could either take a first position or a second position. If we needed a couple of investors, that's how we operated that. And we had a real estate attorney who was board certified in Texas, that could issue all the promissory notes.
Yeah, so I think that's how most people, when they think of real estate investing, I think that's how most of us think when we're first kind of learning about it, or first thinking about it is, you buy a rental property, you rent it out, or the other side of it is flipping, like you said. And I think that's where most people kind of get their start. I have a background in mortgage. I've been working in the mortgage space for a long time. Vast majority of the beginning of my career, that's really all I knew of real estate investing as well. Kind of started like yours, where I attended a conference that I was invited to about multifamily syndications, and that's really where the doors kind of opened up, and I realized there was this whole other side to the real estate investing business that you're talking about, and I want to get into some more details there, where talking about, instead of just buying one property, renting one property, maybe cash flowing on a good property $200, maybe on a great property you're getting maybe $500 a month after all of your expenses and everything are factored in. And now you're talking about going from that into multifamily, which we're talking larger scale, 10 unit, 20 unit, 50 unit, 100 unit apartment buildings, and how you as an individual can get into actually investing in these deals and earning larger sums of money over time. Let's talk about that journey, because I think I love to hear how people got into that. I know it was very eye-opening for me when I first got to learn about this. Let's kind of talk about the beginnings of that journey.
Sure. Well, when Dan and I first started out, we started out at Brad's foundation level because we did want to see how that worked. Introduced to people who had some strong credentials that we could kind of work through and work from. So that was kind of our original investor base. Over time, our criteria has changed, as it does, because the environment changes. But we had the opportunity to meet people who already had some experience in that space. And they had some strong cross skills from their previous life as far as what they could offer. And I will tell you, I was always looking for that. I wanted to see what people did before they were real estate investors. What did they do before they built a real estate investment company? How they were leveraging that in their business. I was always looking for that, but it was a great time to really start with that and to get to know people very quickly. And I was able to know people very quickly. I had people who introduced themselves to me, including the family who they operate their own company. It is Reap Equity out of San Antonio, Texas. The daughter, the son, and the husband and wife. All together, they built this company. But I was introduced to them very early. Some of my early investors that I worked with in the company, because I just saw what they operated. And that is something that I look for even to this day. Offering before you made the decision to build a business. And what are your credentials? That's very important to find out what people's credentials are coming into that space.
Absolutely. Yeah, I think it's important to know who you're working with, their kind of track record. It's very interesting because a lot of us come from a lot of different backgrounds. And, not everybody started out as a real estate investor. Almost nobody did. We all bring different sorts of experiences, and that allows you to kind of have different methods of thinking on everything. It's great. I noticed one of the first things as I came into this community is it was very open, very helpful, people were really willing to help, make connections where needed, explain things to me as I needed. It's very intimidating to get in front of this crowd, I think, as a beginner. Because you see these folks and you hear them talking about how they own these large properties and how they have these tens or hundreds of millions of dollars in assets under management. I think it's very intimidating, but the pleasant surprise was kind of talking to folks and how helpful they were willing to be with me as a newbie or with anybody I see that's kind of newer to that community. So that's great.
Yeah, I was definitely welcomed by some individuals. And there's some people, they're a little more private, and that's the way I like to really phrase it, not really see them as cliquish. They're just private people. And then there's some who really do have the heart of a teacher. And those are the people that you really try to make those contacts with very quickly. And you can establish a comfort level with them very quickly because that is their mode of operation.
Great. So let's talk a little bit about your investment criteria. What are you guys looking for? Are you guys staying local to Texas? Are you looking around the country? You know, what kind of sizes? And give me a little bit of an idea of what you guys look for in a property.
Sure. Well, our buy box is still staying with smaller units. And by smaller, I mean around 100 to 150. Because that is something that you can utilize syndication with, which syndication, it's really only a collection of investors. So it's like private lending, but on a larger scale. Half of my portfolio has gone full cycle. And those were 18 properties, totaling 3,507 doors. That's what's been held in my portfolio. I'm always looking for some investments for the future, because I can't be everywhere. But we do have a general partner team that is on the hunt. We are looking at 150. Since part of the general partner team is local to Dallas and Fort Worth, we are looking in the Dallas and Fort Worth area. And we are not venturing in a secondary or tertiary market. Because honestly, Jerry, and you know this, investors are a little nervous right now.
Yeah, that was one of the things I was going to ask. What are you seeing as the challenges now in the current market here for the last year and a half, as compared to the previous 3 to 5 years where it seemed like things were just flowing, everyone was just very happy with the way things were going? There's been a definite shift. How has that impacted your underwriting and your criteria for are you seeing less deals? Are you seeing more opportunity? What does that look like for you guys?
The volume has been low, I will say, because I do take the time, and I have, to call brokers. And I've had brokers that call me. I've had brokers that haven't had a chance to call me back yet because they're at a conference. They are actually taking time to offer smaller properties that are outside of my buy box. They're just too small for me, Jerry. Honestly, I want third-party property management, and it has to be of a certain size to have that, because I don't want to go in and self-manage. One of our general partners is actually doing that with a 40-unit in Denton, Texas. He's also a microelectronic engineer. He's managing a couple of teams, one in China, one in India. So this guy, he's just super, super busy. But he's having to do everything to keep that net operating income in a really solid place. So that is a lot of work, and I do really want third-party professional management for my investors as well.
Sure.
I will say I never invested in a property that was self-managed. I certainly don't have that track record. That's what I'm seeking out, third-party property management. And in my buy box, in our team's buy box, we're really looking at something late 70s or possibly early 80s, and probably around 15 million maximum. My buy box is very specific. Part of the reason for that acquisition price being around 15 million is because of the debt. It's because what we've been experiencing in the environment, especially within the last 2 years. Capital raise is challenging, even with agency loan. If you're going agency, you're having to raise the entire capital expense budget outside of that loan.
Yeah, I think it's been an interesting dynamic. I think like you said, there's a lot of wariness around investors with just a lot of things. I mean, everyone feels a little unstable right now. Capital's harder to come by. I think it's good to stick to your criteria. You know, I talked to another syndicator a while back, and he was a little discouraged that he wasn't able to find a property that met his criteria in the last year and a half. I felt like that was a good thing. I said, look, you're sticking to your guns when there's not as many deals coming across your table instead of trying to force it. And I think that's where you run into issues where you're squeezing something into your buy box that really isn't there just because trying to get that next deal through. And you've obviously had a lot of success. You said that you've taken a lot of your portfolio full cycle, meaning that we can explain a little bit about how syndications work. For most, they're looking for properties that have value add, right? You're buying it at a good price where you can see some improvements to be made on the property to increase the value. You can see that maybe the rents are lower than they should be, and over time you can get those up to where the market is. You're looking for opportunities to reduce some of the expenses and add additional streams of revenue on the property. That's how you increase the value over time. You kind of go into this expecting that there will be an exit point. Time frame is, but usually it's in that 3 to 7 year range depending on the property.
Right. And our model is usually a 5-year exit strategy.
Sure.
I've had a couple that have gone a little longer than that, but they've been in the Columbus market. And everything that we've had in our portfolio, I will clarify, has been as a passive investor. This is really where we've come, and we have come to a place where we can be generous with our family because of some of the properties that have gone full cycle and had some really excellent returns. Now, some of these general partners did a really fine job on the asset management side too. So that would be another thing that I would really suggest, looking for strong asset managers. And if it's a general partner team, look for general partners who have a track record. Now, even if you have some general partners coming in to the general partner role, but they've been experienced passive investors, and you've got some seasoned general partners who have been in this space for some time and who have gone full cycle on some properties, I think that is a very reasonable and desirable situation as well, because you have a combination of people are coming in and they're being shepherded really. But times have changed, and so I really do want to know how seasoned the general partner team is. And I also do want to know if they've had some distributions that have been paused. I have experienced that as part of my passive portfolio at this point in time, and I do call the general partners. And because I previously was a financial analyst or a senior business analyst, I read all the monthly reports. So when Dan's away at the plant, Bill Helicopter, I'm reading those monthly reports. The general partner that brought me in as a passive, they know that I'm going to do that. I call them. But I also have asked, do you have any capital calls? I asked these more challenging questions just last week. A very senior, very seasoned general partner team. But I did ask them those questions too. And they understood that my criteria is really tightening. I'm really asking more of these questions that they just really weren't as required back in 2015. And the frequency wasn't there. And this is a more frequent situation.
Well, yeah, and I think if you're newer to trying to get into this type of investing, that's the easiest entry point, is being a passive investor, right?
Yes.
You may not know how to operate a building, you may not know how to find these buildings, you may not know how to underwrite them so they see the opportunities, but if you've got capital and you are an accredited investor, easiest path is to find someone, like you said, who has that track record, who knows what they're doing, who has a history. Look at their deals. If it sounds good to you, that's when you put some money into the deal and try to get some of those returns. No, that's awesome. I appreciate all the insight there. I want to talk just briefly. I always like to ask, what is a book that you suggest to the audience? If somebody's looking to get more into this investment, or even on the entrepreneurial business owner side of things, what's a book that you recommend to anybody who asks?
Okay, I'm going to go ahead and have 2 books, Jerry, going outside your box on this one. Okay, I'm going to say Tax-Free Wealth, Tom Wheelwright, because where I'm at this time, and I was at this place in the very beginning, I was also looking for some tax advantage and tax sheltering, because that's some things that you do have to consider. And some people have to consider that sooner. And then also Rich Dad, Poor Dad.
Rich
Rich
Dad
Dad
Poor
Poor
Dad
Dad.
is the investor's Bible.
It's just classic, and I've had the honor and privilege to meet Robert Kiyosaki twice. We've had our pictures with him, even my daughter has, and he allowed her to have a separate photo with him back in 2019. He has just such a love for financial literacy.
Absolutely.
And that's why he and Kim created, or he wrote Rich Dad Poor Dad. It's so the cash flow game would
Right.
sell better. And that's why he did it. And I heard him talk about that, really from the stage. It's really you don't really know that until you meet him in person, just how passionate he is regarding financial literacy. And I truly respect that.
Yeah, 100%. I mean, that's a big part of my passion project here is to show this whole portion of the country that owns businesses, especially these blue collar businesses. I don't see a lot of people talking to teach them how to take that business and turn it into something that's lasting and turn it into a retirement, to a legacy to leave behind for the next generation. No, I really appreciate all the time. Obviously, Rich Dad Poor Dad, great. The other one I'll try to find it and put it in the show notes. That's not one that I've heard. It's called Tax Free Wealth, you said?
Tax-Free Wealth by Tom Wheelwright. Tom Wheelwright is Robert Kiyosaki's CPA.
Oh, great.
And I have had the honor of meeting Tom Wheelwright more than one time, even at some masterminds too. You can't get enough
very
of Tom
cool.
Wheelwright either.
Oh, that's great. No, I will definitely put those suggestions in the show notes. Well, I want to thank you for your time today, Sharon. If people are looking to learn more about your investments or find you, what's the best way to find you?
Well, they can find me. I do have my website, which is www.excalibur. I will spell it EXCALIBRE Texas.com. I am also on social media, and I have a YouTube channel, so you can see some other podcasts, what I've had to say to some really talented podcasters and investors.
Fantastic. Well, yeah, we'll put all that in the show notes. If you want to reach out to Sharon to learn more about their investments, or maybe possibly invest in one of their deals, definitely reach out. Thanks again so much for your time and for your insight. Looking forward to doing this again someday, and we'll have to get Dan on as well, and
We love it.
we'll talk some shop. Thanks so much, Sharon.
Thanks again, Jerry.